I recently gave a bot trading workshop at the Future Blockchain Summit in Dubai. And while there are photos and little video snippets and things like that of the workshop, the entire workshop isn't really available in video form. So for those of you that were actually there, hi, nice to see you again. I'm going to deliver the exact same workshop, but put it up here on YouTube for everybody else to listen. This video is very much longer than the other videos that I have, and it's going to be a lot more dense as far as content goes. Sit back, relax, and I'm going to do my best, even though I will have to stop my camera because it stops recording at the 30-minute mark. So I'll have to stop it and then I'll keep going. So hopefully there won't be too many interruptions. So without further ado, let's go ahead and start my bot trading workshop that I gave at the Future Blockchain Summit in Dubai. So hey guys, what's up? It's me, Moon and Papa. I am a cryptocurrency trader, and I've been trading crypto for the last almost 5 years. I got into crypto back in November 2017, and then in 2018, very, very early, in about January really, I discovered a platform that revolutionized the way that I looked at trading. I had traded stocks before previously, but really when I got into crypto, it was a whole new world, and Aladdin and Jasmine were happily flying on their carpet together. Like, it was amazing, but it was also really volatile, and I needed some tools to help me. And over the course of time, I learned about bot trading. I learned different trading techniques that I still use today, and I teach lots of people how to do those things on thebettertraders.com on the courses that we offer. So the whole purpose of this entire workshop is to cover these 5 points. I'm not big on reading bullet points, although I did have to read that disclaimer. I'm not going to read all of these, but I just want to give you a second to read through these to make sure that these things make sense to you. This is ultimately the benefits that I see in bot trading, understanding the advantages of bots versus humans. We're going to look at all these different things as I go through this presentation. So let's get started first with why bot trading. Well, the best thing I can tell you is that I can break it into 4 different categories. 3 would have been really nice and tight, but 4 looks symmetrical, so I did 4. No, I'm just kidding. It really is 4. It has to do with saving time. It has to do with one-click presets, automatically accumulating tokens that you see long-term or potential future promise in, and of course, data-driven trading, emotionless trading. This is one of the biggest things that people enjoy about bot trading. Now, it doesn't mean that you completely set it and forget it like a crock pot. You do have to check up on your bots, but we're going to talk about that because running bots really does save you time, but you still have to invest a little bit of your time every once in a while. So let's keep going. So let's talk about time savings first. Think of bots like your 24/7 trading team. This is, and I don't want to use the word army for obvious reasons, but essentially your trading team is ready and willing to go at all hours of the day. Whether you're telling them what to do or not, they're just going to keep running. They're going to keep generating deals. They're going to keep trading for you. This is the biggest blessing that I have found in bot trading, that while I work at, actually for a long time, I was actually working at a school full-time. Now I'm just part-time because I just like teaching. It's fun. So I was teaching full-time at the school while my bots were trading for me during the day. When I'm home with my family having dinner, the bots are trading for me. While I'm sleeping, the bots are trading for me. While I'm giving this presentation, literally my bots right now are trading for me. This is a huge advantage to having bots working for you. You don't have to be sitting there in front of the computer hoping and waiting for a trade to open up. It's nice. It's nice to have the fact that you can have these bots run and you don't really have to do too much with it. And that leads into the next point, which is automatic accumulation. So a lot of people like bots for many reasons, but one of the biggest reasons why I like bots is that I can set the parameters of what my portfolio should look like in the future. Now, this is maybe what your portfolio looks like. You have a lot of Bitcoin, hopefully. You have some Ethereum, which is good, some Tether or some stable coin, which is good. Then you probably have lots of like crypto trading dust. And basically this is all of like the leftover stuff, or like things that you're just like, wait, how did I have that? I thought I got rid of that. So what bots can do is it uses up the tokens that you have, like your USDT, your Bitcoin, even your Ethereum, and then you can use those funds to start accumulating tokens that you see long-term promise in. Like, for example, Cardano, Polkadot, Dogecoin, things like that. It honestly can be anything, and it could even just be directed 100% at growing your Bitcoin stack. It's whatever you want, and it's automatically going to accumulate. So another nice thing about bots is that 3 Commas has this really cool app that will let you basically program a bot with a one-click preset. So I'm going through the parameters here on this screen recording, the screen capture for OKX, showing you how fast it was to set up a bot. Actually, it was faster for the video than for me to actually explain it. It's that fast. Now, I don't use presets every single time, but there are presets that I do use and follow, and I share with others as well. So one-click presets are great. Having the app is fantastic and is a lifesaver, especially because you can get updates on your bots and you can manage active trades. Plus, you can view and manage your portfolio. These one-click presets through the app, having your bots, the control of your bots in the palm of your hand is very powerful, and it's very, very useful. And again, my favorite thing, this is not me, I don't know who this guy is, but he looks very peaceful out there in the wilderness looking at the sunset. And now he has green eye. Ooh, got healed. That's good. Wait, now he has a sorry, I didn't do this in the presentation, but it's kind of fun to mess with this. Honk, honk. So he is at peace because his bots are trading for him, maybe. But the whole reason that, not the whole reason, but one of the biggest reasons, the biggest barriers to entry I think most people have about trading crypto or just trading in general is that it's risky. And no doubt about it, like what I said in the disclaimer is 100% true. There's no guarantee of profits ever, but we can leverage bots to make profit. My bots do generate profits pretty consistently, but it takes out the other part of that. The reason why people don't want to trade is because they're worried that they're going to take a loss. Or they've been burned before because they went all in when they really shouldn't have in the first place, right? So the benefit of bot trading is that it takes the emotions, it takes the humanity out of trading, which is really nice. Not to say that it's fully automated. You do make decisions as a human. You pick the charts, you pick the tokens, you pick the settings, but in essence, like it says here, bots process trades, not emotions. It's data-driven trading. I like this the most. When we see volatile news come out about this, that, and the other country, or bad financial news happening around the world, the bots don't really care. They don't read the news. They don't care. They have one job and one job only, to listen for a signal and then to open up a trade and then close it. I guess it's three jobs, but you get the idea of the sequence, right? Right, good. So now that we've talked about the why, I want to talk about the how. So we have some strategies that I want to share with you in this next section. And there's going to be a lot of stuff. You have the benefit now of this on YouTube where you can rewind, you can take notes, you can do all that stuff, where people that were watching live did not have the ability to do so. So let's jump right into it and enjoy the fire hose of information. So I want to talk to you first about DCA bots. So essentially, these DCA bots on 3 Commas are fully customizable, as it says there. They offer long and short bots. There are literally thousands of different parameters and outcomes and settings and deal start conditions and all this stuff that you can choose from. There are honestly so many options and so many ways to start your bots and even to close those bot deals or those bot trades. And by the way, as I give this presentation, you're going to hear me say bot deal a lot. 3 Commas has made specific terminology for trades that bots open, labeling it as deals, whereas their active trading side, the smart trade, they're all just trades. So I'm not going to be talking about bot trades too much. I'm going to be talking about bot deals, just because, again, that's the terminology that this specific platform 3 Commas uses. And I think a lot of people get they get confused about bot trading because they think, great, bot trading. Now I have to learn like Python and C# and I have to do all this stuff. Well, I think of it as C#, C number. You know what I mean? That's the programming script. But you don't need to know how to code to set up a bot. You don't need it at all. I may look nerdy, but I don't know how to code. I really don't. So that's where the bots really help me out. Okay. So I just want to talk about how DCA bots work, why they work so well, and why I'm devoting so much time talking about these things. So DCA bots are optimized for trending markets. Now, this illustration right here is obviously showing a bullish or an uptrending market, but really DCA bots, especially if they're short bots, they will work on a falling market as well. The whole point is that it needs to be a market that is trending. That's the key word. The other thing that's really important to know about DCA bots is that DCA bots are designed with negative price action in mind. We want the price to fall down. Contrary to popular belief, I am used to seeing, and it is completely normal to see red whenever I look at my bot deals. Sometimes you're just sitting and waiting for bot deals to close for quite a while. But you know what? If you follow DCA strategy and you're patient, lo and behold, those deals should close in the green. And what's going to be more fascinating, which I'm going to show you in a second, is that you want there to be negative price action. You want the chart to fall because of how DCA bots work. So let me show you a visualization on the chart about this. And this is really going to help you understand what I mean by negative price action, which is something I talk about a lot. And I use that phrase, I coined it a while ago. And I love how it sounds though too, because negative price action sounds like a bad thing. But in reality, in terms of bot trading, it's actually a very potentially profitable thing. So we're going to look at a deal that was closed here. This is for a trading pair on the BTC market. So this is, I think, Kyber Network. So KNC against BTC on the 5-minute chart. So right here, we can see this B. This is telling us that the bot bought the BOUGHT, the bot bought some KNC using BTC. So in this scenario, this is a long bot. And that means that the hope, or the plan rather is a better word to say, not hope, but the plan of the bot is to sell the KNC that was purchased here at 87.80 at a higher price. Because when you use Bitcoin to buy KNC, once the price of KNC moves up higher, the Bitcoin that you had previously invested into KNC, now KNC is more valuable, so you sell the KNC to make a profit on Bitcoin. Note that you can also profit in KNC as well on 3 commas. I'm pretty sure I'm getting ahead of myself, but you know what? It just kind of comes out naturally. So on 3 commas, the first initial bot deal is called the base order. It's that initial first order. So what happens next? So here's our base order at 87.80. And now as soon as this happens, they're automatically laid these extra trades, which they call safety trades or safety orders. So safety order number 1 is down here at 86.50. Remember, 87.80 down to 86.50. Once this is placed, there's already a limit order right here waiting. And as soon as the price of KNC falls to 86.50, it buys more. So how much more? The DCA bots that I use the martingale system. So we're going to use round numbers to explain this too. And I know for sure I'm getting ahead of myself, but let's just say that this is 1. So for the first safety order, this volume is 2. So we have 1 plus 2, now it's 3. The beauty of martingale is that by every single safety order that's added, now we can see right here, what it does is it drastically averages down the buy price. Remember where this was? Look at the price. 85.21 is where the average buy price is. Where do we initially buy? 87.80. Because the price continues to fall, again, negative price action, that's the key phrase here. As soon as you see it fall down to hit that, or rather fill the safety order number 2, or the second safety trade order, when there is a price rebound, when the price corrects, here is where it actually takes profit at the S, at that. And it's a little bit hard to see, but there's a red blip right there. There's a red triangle, which is an inverted green triangle. But this is our take profit, or our target profit, or take profit target, something like that. So what we can do with DCA bots is that even though if you were to trade this chart, honestly, this looks like it's a bad idea. I mean, look, it's falling and it's falling even further. And then you would probably sell here because out of your humanity, you're seeing a falling chart. And even when you're looking at the bot deal, this would be red. This would be a negative unrealized loss. But trusting DCA on this little bit of a dip, what happens next? Boom. The price comes up for KNC, profit is taken, and now we have earned a profit in Bitcoin or in KNC. And the only way that this is possible is by automatically laying down these additional safety trade orders, multiplying the amount. So 1, 2, and then this would be 4. So altogether it's 7. So we've drastically averaged down the buy price and the take profit target. That is how it works. So that deal was started from what we offer for free on 3 Commas. So 3 Commas has a marketplace with tons of different signal providers that have tons of different types of signals. These signals are essentially telling bots to either open a deal or close a deal, open a trade, close a trade, right? So we at the Better Traders, I created these specific signals for people that take our course 15 Minutes to Financial Freedom, which I'm going to talk about at the very end of the workshop. But these signals are actually free to anybody. And I'll give you a little bit of a hint too. This is kind of cool. 3 Commas has partnered with 2 very excellent exchanges, FTX and OKX. So when you have crypto on FTX or OKX and you connect your API key to 3 Commas, you can actually use 3 Commas Pro features for free. So that's a benefit right there. So you can use all the bots you want for free. And these signals right here, the Better Trader signals, these cost you a whole lot of nothing. These are completely free because they're starter level signals. I have seen lots of good signals and lots of bad ones over the years. The best signals that I can offer are these ones for people that are new to bot trading because they're very safe, they're very slow, and they're very conservative. So these signals will help out most people that are brand new to bot trading. They handled the dump that happened back in June 2022 when Bitcoin dropped down to 17.6 beautifully. And we have data to prove it too. So we're looking at data right now, overall performance since inception, back in November 2020, when Bitcoin was at about 17,000, maybe 18,000 or so. So pretty much where we are right now at the filming, or at the time of this video's release, right? So since that time, the total bot profits over 2 years is 69% for Bitcoin, the BTC paired bots, and for the stablecoin bots, it's 92.89%. Now, I want you to understand that the profits shown here, I would say that 98% of all of these closed automatically. So that means only about 2% of these, I actually had to go in and what I call bailing out or rescuing a deal that basically the price keeps falling. And I'm going to talk about that later in the workshop. But I really just want to focus on the fact that this is 69% total BTC gains over 2 years, passive, hands-free. And if you know the chart for Bitcoin from November 2020 all the way up until now, which is basically almost November 2022, it has not been a flat, nice ride. It's been real whipsaw. So a lot of people that listen to, well, me, when I talk about bot trading, like, well, I mean, the gains are so small. Well, if you bought Bitcoin and didn't do anything with it back in November 2020, you're still holding it now. Guess how much profit you have? None. You maybe have like 2, 3, 4% profit, where these bots have been generating profits, and now they're up to 70% over 2 years. Passive profit. I'm going to keep going. So data is something that I care about a lot. Here on YouTube, around the 1st of every month, I make sure to put out a video talking about these signals and my other paid signals, the top 10 signals and the DeFi signals. And I talk about the signals roundup, or like the signals performance for the last month. And I go through all this data, and I'm going to go through a lot of that stuff again. It's going to be very familiar, especially if you've seen the previous ones. So in essence, what I want to do is I want to look at a couple of points of information. It's nice to know the total profit, but that's only a part of the puzzle. So I want to know mostly how many safety orders are used up per trading pair. Because if I know how many safety orders are used up, and here are the emergency ones, you can see in contrast to all of them, out of 119 total closed trades, only 2 of them I had to manually rescue for BTC ADA. None here for DOT, none. So you can see there are moments here, like Link, I had to bail it out a lot, many times. But looking at this would be what, 3% of the time? Yeah, approximately 3% of the time I would have to bail deals out. So I love this data because it gives me a lot of information to show how much of these really close on the base order, that first initial one, safety 1, safety 2, and how many need extra help. So by looking at that information, now I've compiled all of these percentages to look and see, based on the grand total, what's the percentage based on the grand total of these signals that close with the base order. And doing this for everything, we're looking at these numbers down here, almost 60%, 24 or 25%, and 15%. So let's just round it up because it's easy. So 60, 25, and 15, okay? What we want to focus on now is we want to identify trading pairs that beat the averages. So if we think about it, going back to that illustration on the chart where we have our base order, safety 1, safety 2, we're thinking about our volume used. Base is using 1, safety is adding 2, safety 2 is adding 4. So we're looking at a total possible volume of 7. That means it's 7 times more profitable to close with your second safety trade being used up. But we know that the average here is about 60% of the time, more than half the amount of time, we're only going to close with 1/7 of the total possible volume. So what does that mean? That means that we don't want to have tokens in here that beat this average. We want to underperform. We want to find ones that are not doing as well. So we want to see ones that are a little bit less, like here, XLM, like this one right here, Link, Ethereum, EOS. We want to find them actually that's basically right on. But we want to find those that identify the ones that go over, because we don't want those unless you want to, game the system and try to focus on deals that close faster. But we'll get to that in a second. But really, it makes more sense to find numbers over here that beat it. So we want to focus on trading pairs that beat that. So right here, XLM is a great example. Right here and right here, Dash and EOS is good. But the reason why Dash is not highlighted is because there are only 75 closed trades. We want at least 100. So that way we know that it's reliable data. Same thing over here. We want to find numbers that are higher than this number. So it looks like Tezos, XTZ, 16% of the time, it's actually using up that second safety trade. Here is 18%. That looks amazing, but look, only 32 closed trades. I can't trust that. So I'm going to look at things that are higher, a little bit better. So like this one here, again for XLM, and this one is just under, but it outperforms here. This one looks good here for Link as well, but it underperforms there. So again, we want to look at the data intelligently. So there are ways as well that we can manage our portfolio and distribute our funds in an intelligent way. When I first got into bot trading, my thought process was I want to spread my account out as much as possible over as many pairs as possible because I want to spread my risk. I want to make sure that my bots are generating profit every single day. And maybe that's how you approach bot trading as well. But I need to tell you something. That's not the smart way to go about it. Actually, that whole mantra of less is more, that minimalist attitude, that's going to be really, really helpful when it comes to bot trading. Because when we use more funds, or rather not more funds, but we have more trading pairs, and this is a preview of the DCA bots, the advanced DCA bot view. So we can tell the bot how many active deals, again, how many active trades will it have at any one time. So we can set this to 10. There are 10 trading pairs up here. And that means that it's going to be about $1,820, or USDT rather, which is only 69.84. We'll just say 70%. Keep this number in mind, okay? Keep this number in mind because I'm going to address this in a minute. So when we have more trading pairs, that means we have wider fund distribution, and that means ultimately we have a smaller profit potential. So if we're thinking about 60% of the time, right? 60% of the time, we're closing our bots with that first base order, then that 1% take profit target is only going to earn us, what, 26 USDT, or 0.26, like 26 cents, like a quarter, not that much. So when we apply that idea of less is more, when we reduce our max active deals to 5, that allows us to double our base order size. It allows us to get 2 times more profit. and we're still using the same amount of funds. Plus, if we know that not all the trading pairs are really good performers, we just want to focus on the high performers right here, right? Why would we want to risk our capital on tokens that historically have not performed well? It doesn't make sense. So there's an intelligent way to approach this. Not only are we going to have more profit per pair, we know that these ones, historically speaking, use up more of safety 1, safety 2, which means they're going to be more profitable long term. Going back to the data, at the very beginning, I actually want to go back just to explain something where we're looking at the number here. This is showing profit for all of these trading pairs. There are a whole lot of trading pairs in these bots. When I post profit per month, like the P&L reports, that number should be the baseline, meaning that that's like the smallest amount that's humanly possible. Because if we're thinking about how much of our bots are we really going to use, do we want to make sure that we're like underperforming this? No, we want to outperform the averages. We want to make sure that we're using our our safeties intelligently. We're putting our volume there. So that's why we intentionally choose trading pairs that historically perform better. Another way that we can find trading pairs that historically perform better. Oh, this is the slide that I actually wanted. It was right in order. So in September, just to reiterate one more time, you can see the total amount of the trading size that's here for the BTC account size, the total amounts that is reserved for this bot, how much was gained, and how much BTC it's earning per day. So you want to beat this amount as much as you can possibly do. And by removing a lot of these trading pairs, you're going to be able to do that. Just statistically speaking, that's how it works. And other data that I show as well is maybe you want to focus on trading pairs that close faster. So that's what I have here. This is showing you that, for instance, like a higher number right here, like 0.25. This means that we're going to see an Atom or BTC Atom deal take about 3 hours and 20 minutes, or maybe it's 3 days and 20 minutes. I can't remember. I can't remember totally. Oh no, how embarrassing. I'll figure it out and I'll rectify it in the next signal performance one. I have a feeling though that it's hours. So it should last about 3 hours and 20 minutes. And we should see one of those every 4 days, or 25% of the time, essentially. So that's how you can use this data. So we want to avoid low numbers. This isn't good at all. We want to find not only just high numbers, but high numbers that have historically good data. Look, 165 closed trades. It's closing, or at least opening and closing, one trade or one deal every 4 days. Right here, a little bit more, and it's actually a really good time, right? So we want to use this data intelligently, because when you look at the data, then you can really tweak your bots to make more profits for you. And that's what it's all about. So now I want to move into my workflow. When I set up a bot, like I said before, I rarely just hit that preset button and start a bot. What I want to do is I want to think through a couple of things. So all of these different steps, this is essentially my workflow. Now I do it a lot faster than I'm going to explain it to you, but I mean, that's the whole point of a workshop, right? So I just want to help you understand how I approach bot trading, what I look for in a trading pair, and make sure that you understand how you could replicate the same process. So the first thing is it has to start with a trading pair. So I want to identify suitable trading pairs. So that begs the question, what is a suitable trading pair? So when you're looking at an exchange like OKX, you can see that there are a whole lot of coins, a whole lot of pairs. There are actually 626 trading pairs on OKX. How do you know? How do you know what a good trading pair is for a bot? Maybe all of you that have used 3 commas that are watching this workshop, you've just hit BTC all or USDT all. That's not a good method. It works in some market conditions, not all. So what is the key here? Is it about accumulating tokens that you see value in, like BTC USDT? Sure, it can be. You can have it focused on tokens that you see value in, but I think that there's a better way to do it. And that's by taking some time to identify really good looking charts. So I have 3 different charts that I want to share here that I think are really good examples of what a DCA bot a long DCA bot candidate should look like. So first up is XMR BTC, which is Monero against Bitcoin. This is the daily chart. And what I want to show here is that this one is a slow uptrend. It's not going straight up. We don't want to touch charts like that because unfortunately what will happen is that your DCA bot will buy up here and then the price falls back down and it drops. So avoid anything that pumps too quickly. Now, thankfully, this one generally has this support line, or if you applied a moving average, you'd be able to see it kind of hovering around the price a little bit like this, right? This is a really nice uptrend, especially from about here, June 14th on. This is beautiful for bot trading because you have negative price action, but it keeps moving up higher slowly. That's the key. Another thing that I look for in bot candidates for a long DCA bot is an oscillating chart pattern. So what I mean by an oscillating chart pattern is that anything that kind of just moves like in waves, just going up and down. Now I'm hypnotizing you. Oh. But you can see it here. It's just going up and down, up and down. And the faster and tighter these moves are, the more activity your bot will have, which means especially in moves like this, it's going to eat up safety 1, safety 2. It's going to return right back up, close and profit. Safety 1, safety 2, close and profit. Safety 1, nope. Going. Okay, safety 1, safety 2. It goes a lot further. It takes a little bit of time. Boom, close and profit. Safety 1, rinse, repeat, rinse, repeat, rinse, repeat. The last thing you have to look for in a chart is consistent history. Again, you want to avoid charts that have sporadic pumps. Those do not end well for DCA bots. Trust me. I'm showing you this chart for Cosmos, which is Atom. The ticker is Atom BTC, going all the way back to the beginning of 2021 up until, well, when I gave this presentation at the beginning of October. The reason why I have this is because I want to show you that even though there are these mega moves that happen and we have a lot of sideways nothing and then panics and it just does a lot of this, we get we get stuck here at this peak right up here. So what's amazing though is that even with DCA and well-timed DCA, when you know how to look for support or resistance, you just have to wait. And sometimes waiting means you're waiting a couple of months to get closed out in profit and then do it rinse, repeat, right? So even here, I guess this would be January or February. If you had your safeties used up and you even applied a manual safety trade right here at this line of support because the price action is right there, it just takes time. But you know what? The price returns and you close out in profit and you keep going. A big misconception about this, by the way, actually, I'm getting ahead of myself. I'll talk about that later. I just need to stick to my script, which I'm not looking at too much. We're going to keep going. So the next thing that I want to look at is the strategy. So I want to think about, am I focusing on a long strategy or a short strategy? What am I going to take profit in? And am I looking at scalping, taking profit really quickly, or swing bot trading, which means I'm taking profit at like 5, 10%, 15%, something like that. And I can answer that real quickly. For the most part, I am taking profit real quick with bots. I think it's much more effective to take profit early between the 1 to 3% range instead of taking these big 10% wins that are sometimes very slow and far and few between. So I want to talk about the strategy in regards to long or short, because you can choose your profit currency. So again, I talked about that KNC BTC chart. So for that chart, for that bot deal, I had the option to choose to take profit. I had the option to take profit in KNC, Kyber Network, or in Bitcoin. So that profit currency, that's what it's called, gives you a lot of potential to accumulate tokens for the future. But there's a time. There's a time and a place for everything. And I want to show you this chart for XRP. So my personal strategy to this, my belief in how this works is that it's always better to take profit in what's called the base currency in a bull market. So the base currency in this case is XRP. Base is XRP and quote would be Tether or USDT. So the reason why it's better to take profit in XRP during this amount of time is because as you start the bot and it's generating profit, all the profit is now kept in it's an XRP. So this means that you are accumulating XRP to hopefully sell for a profit. Now note that it's not all rosy posy. There are big drops that happen and recoveries, all that stuff. And finally we get to the top of the bull market. Over that amount of time, the value of all those XRP tokens that you were accumulating down here are now worth around anywhere between 900 to 1,000% more. So the idea is that you've accumulated, now you're going to sell hopefully near the top, right? Hopefully. But let's say that you don't. What doesn't work is to keep your long bot running. What you want to do next is you would want to short. And the reason why is because you want to take advantage of the downtrend. And by shorting, you're able to decide if you want to take profit in, again, Tether or XRP. Now, if you're a diehard XRP fan, I guess you're going to take profit in XRP. But the problem is that the value of XRP has dropped 80% in 13 months. I think it would be smarter to have 80% more USDT instead of 80% less in your total USDT worth for that account. I hope that makes sense. So here on 3 commas, it's actually just a click of the button. You can choose your strategy to be long or short. You can choose quote or base for your profit currency. So again, looking at this, it makes way more sense to take profit in XRP here. And it looks like it would make way more sense if you don't want to sell your XRP ever or your Bitcoin ever, then you could keep your Bitcoin, but you hedge your portfolio by using a short bot, and you keep the same amount of Bitcoin and you're buying it back lower. You sell and you buy more, buy more. You sell, and you buy more as it falls down. You're buying the same amount, but because you're getting a discount every single time it falls lower, that's creating a hedge on your portfolio's worth. It's a really, really great strategy that you can use. So that way you don't just have to hodl, because as you can see here, hodling can be extremely stressful. I mean, if you bought all of your XRP down here at what, 14 cents or so, you would still be up. You would still be in profit. I understand that. But you could have made a whole lot more profit up here, and you could hold it and hedge your XRP very, very well right here too. I mean, it's just kind of a no-brainer to me that it makes way more sense to hedge than to hodl. So now that we've decided our trading pairs and our strategy, now we're going to look at the deal start condition. So there are lots of different options for this. There are built-in signals in 3 commas. There's the marketplace where we have our TBT signals. There's also a TradingView webhook that you can use. So essentially the deal start condition is a trigger that starts a bot deal. Going back to that KNC trade, if you can go back in your mind's eye, that started from the TBT signals. So we can also use all of these, which are very, very fun to use on 3 commas. Now this is getting a little bit advanced, but these essentially are all TradingView JSON code messages. So a note, you'll see here that email token is blanked out. You can't see my email token. You should never share it with someone, because essentially this is the keys to your kingdom. And if someone has your email token, that means that they can cause all types of havoc for all of your bots, for your whole account. But anyway, essentially, what we're going to do here is we can use this TradingView deal start signal, and we can create an alert on TradingView. Let's say for XRP, when the price crosses below this value of 47,163, then a webhook will be sent to 3 commas with this message telling the bot, open a deal, start a deal. I think this is one of the coolest things that 3 commas offers, because using the power of TradingView, and not just price-based alerts, but also indicators and strategies, you can use all those things with 3 commas. It's very powerful. Okay. So that brings us now to portfolio allocation and the 30% rule. So a while ago, very, very, very far ago, actually, I have to scroll back just to bring it back to memory, because I've talked about a whole lot up until this point. There we go. So do you remember this slide? I was talking to you about the reason why I actually have 69% here. It's not to be funny. I have something that I follow called the 30% rule. And that is that I should never, ever use up more than 100, or rather 70% of my available funds for bot trading. I always want to keep a little bit on the side just in case. So you might be wondering, just in case what? Well, just in case something like this happens. So here's a different trade for Link. Right here, you can see this is the base order. Here's safety 1, safety 2, and the price continues to fall. Now, I did not buy right here. I did not place the most intelligent safety trade order ever. For some reason, I thought it was just going to bounce and keep going. It would have been smarter to layer one here, or here, or here, or here. I had so many times to buy at a lower price. But the whole point of this is that by using this emergency safety trade order, I actually closed the trade way, way, way lower than my initial entry. I would probably be looking to take profit around here at 36.80, 36, like up in here. But because of that emergency safety trade order right there, because I doubled down again, then I could close out at a far lower price. Another thing about the portfolio allocation step is I want to think about how can I maximize my profit? And I want to reinvest my profits where at all possible. And sub-accounts are one of the best ways to do that. So I have this great video here showing the entire process of setting up a sub-account on OKX. So the whole purpose while you watch this video of setting up a sub-account is that you can allocate a percentage of your portfolio to a sub-account, and then using 3 commas, you could reinvest all of your profits from that DCA bot into the next deal, into the next deal, into the next deal. So what happens is that your portfolio, or rather this sub-account, starts to snowball. And that snowball effect means that it just starts small, but when you start reinvesting your profits and auto-compounding them back in, it starts to become a mountain. What started like this as a little itty-bitty snowball continues to just grow and grow and grow. So the main thing to keep in mind is that when you create an account, or rather a sub-account, it depends exchange to exchange. I'm using OKX because they're really easy. OKX and FTX sub-account creation is super duper easy. One thing to note though about that API secret that you just saw me copy there and the passphrase is that not every exchange has a passphrase requirement, and that password that just went away, you're never going to see it again. So it's also important to note that when you're doing this, a lot of exchanges will tell you you need to set up 2FA. They're not actually saying that, but I'm telling you, you need to set up 2FA, two-factor authentication. I use an app called Authy. It's fantastic. So that way, if for some reason an exchange is hacked and emails and passwords are hacked and phished, if someone tries to log into your account, they're going to be presented with a 2FA code. They won't be able to crack the code. Same thing with 3 commas. You can actually set up 2FA and protect your account on the platform as well. So the last thing to do is seemingly the easiest. You start the bot and wait. You'd be surprised though at how humanity fails us every time. When we have people taking our courses, we actually provide coaching, and I'll get emails, or our coaches will get emails every once in a while, and people say, I started the bot and no deals have opened yet because they're using the TBT signals. Again, slow, safe, conservative. So just because you start the bot, unless you're using the as soon as possible or ASAP deal start condition, it's not going to start. You just have to wait. And another thing to remember too is that bot trading is all about slow, small, and steady wins. Remember the TBT signals over 2 years, the BTC side generated about 69% profit passively. So that's about 34.5% per year. That's pretty good. I mean, it's pretty good. So for doing basically nothing, right? So it's all about this steady, slow accumulation. And I should also note that those TBT signals, the profits, I'm not reinvesting profit. That's just static using the same amount. If I were to reinvest profit, that number would be ballooned by now. Okay. So I just want to take a second to reiterate the importance, or rather the distinction between hodling, which is an acronym that stands for hold on for dear life, versus bot trading. So the reality of a lot of people's accounts, including mine, is that when I enter a position and I don't use a stop loss for whatever reason, I just think, oh, I'm going to buy Bitcoin here. Well, Bitcoin could go up, 25, 28%, and then come back down in a couple months and even go a whole lot lower. Sound familiar? So hodling, while it works in the long term, there's even no guarantee. You can see here, after a whole year, it's only gone up 20%. But during this time, it's gone up twice and kind of done nothing and blah, blah, blah. Like you all know the roller coaster ride of hodling. The great thing about bots, though, is that it's going to be slow and steady. And you know what? In April, there were no profits. It's actually still at 20%. In May, there was some profit. In June and July, for 2 months, there was absolutely nothing. That's normal. It is normal to have days where no bot deals close. It's normal for weeks to go by and nothing happens. But you know what? Nothing great is ever created suddenly. It takes time. And over time, the bots do win. So let's talk about the difference visually between static versus compound. This is something that I talk about in the courses. So essentially, static means that you're using the same fixed, non-moving, hence static amounts for your bot deals. So 1 and 2 and 4 for your bot deal, right? So compound would mean that after your first month or maybe after the next deal, you take that little profit and you put it back into the bot. So now the next profit generates is going to be a lot more. And then it's going to reinvest those profits in the next one and into the next one and into the next one. Note, it's not all of a sudden the second month, it's just boom. That's not how it works. Compounding is going to be a slow but steady process. But the amazing thing is that after you compound more and more, this is going to start to curve up real fast. You all know what those compounding returns and those calculators look like after 10 years. It's amazing. So I'm done talking about DCA bots. Yeah, I know. Look at the time. Amazing, right? So now I want to talk to you about the other strategies, or rather the other bots that are available on 3 commas, and that would be the grid bots. So the grid bots excel in sideways or consolidating price action, much like Bitcoin has been in ever since June 13th, 2022. So what happens is essentially that there are all of these grid lines, or essentially these are all orders. So when the price comes down, it buys and it buys again. And when it returns, it sells what it previously bought. And then it sells more of what it has, buying and selling over and over. It's actually a very clever bot that excels, again, in sideways markets. Here is an example of a bot that I was running. And I believe this is the 5-minute time frame. No, this would have to be the 15-minute. But you can see here on these big pumps that happen, all these lines, green down here for buying, yellow up here for selling. So you can see all of the BSBS. So this is buying, this is selling, selling, buying, selling, 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 buying, selling, selling, selling. So the important thing to remember with grid bots is that there's a time and a place. Grid bots will not work well in trending markets. Grid bots will work very well in sideways markets. And another tip for you, if you've identified a chart, if you've identified, I added an extra syllable, a chart that's good for grid bots. Be patient and wait for the price to come down to the lower part of that grid, because starting a grid bot up here, not so great. Mainly because you're starting it at the top of the grid, so it's only buying because the price is falling. So your overall profit's not going to be net positive. It's much better to start it way down here, because anything that moves up from the bottom of the grid is all net profit. It's good. So this is actually a screenshot taken way back at October 5th. After I started the bot, essentially 24 hours later, the bot generated 1.82% total profit for this trading pair for PYR, Vulcan Forged Pyre. So 1.82% ROI in a little more than 24 hours is pretty incredible. And again, it's all about just that steady sideways action. Okay, now I want to talk about some tools that we offer through the Better Traders. So volume matters considerably. If you don't pay attention to volume, it's going to cause big problems for you and your bots. So essentially, what I'm talking about here is this thing called the TBT base to quote converter. Now, I've made a video about this that's already here on YouTube. I talk about this during the live streams and during normal videos. But the whole idea about this is that I want to know how much Bitcoin I need to trade against KNC or Atom or Ethereum, or I want to know how much Ethereum I need to trade against KCS or OKB or BNB or whatever, FTT. So paying attention to volume means that you're going to prevent your bot from becoming a wall in the order book. You don't want to be a wall. So what I mean by that is that in the order book, there are two sides. There's the bid side and the ask side. When you're using too much volume and your order kind of, this is the wrong chart, but essentially your order just sticks out, that's not a good place to be. You don't want to stick out in that way. So what the TBT base to quote converter does is it automatically converts the traded volume of Bitcoin into USDT per exchange. So now I know on this day that there was, what, 28,207,779.5 USD traded for this candle. And I can go back. And then I can also know, and this is the more important part, the 30-day moving average, which is this blue line right here. So this is far more important to know. If I know that the 30-day moving average is roughly 200 million USDT, then I want to make sure that my bot does not exceed 1% of the 30-day moving volume or 30-day moving average of the volume. So I don't want to use more than 2 million per my, or rather for this bot, for this specific trading pair, BTC USDT on OKX. I don't think that's going to be an issue for most people, but when we start looking at alternative markets like OKB's token against Ethereum, so OKB is base, Ethereum is quote, then I want to know how much Ethereum is being traded. So the 30-day moving average is telling me that 359 Ethereum are being used. I only want to use 1%. So that means I should only use basically use no more than 3.6 Ethereum in total volume, total possible volume for my bot. That will ensure that I should not be a wall in the order book. And if we look here, already the day's trading volume is at 100. For the most part, it's down here at 100 anyway. So 3 is pushing it because this new burst of volume, but that's essentially the idea of using the free TBT base to quote volume converter. We also have the capability to back test DCA bots with the DCA Back Tester. We have two versions of this. There's the standard version and the pro version. The pro version is reserved for people that are taking Mastering Passive Income, which is our advanced bot trading course. I'll talk about that at the very end. But essentially, this back tester allows us to use the tools and the strengths of TradingView to try and experiment with different configurations with an emulation of a 3 DCA bot. So this is showing essentially where the base order is for our bot and where the take profit is. Base order, take profit, base order, take profit. So this is Koti, K-O-T-I, against Tether. So I can see here over this span of time that 96 total closed trades, it's net profit of 48 or 49%. It beats buy and hold, which is the most important thing to check against. Therefore, this would be a good bot setting. So being able to back test and see the most profitable settings, whether it's the base order amount, safety order amount, take profit, deviation, all that stuff, you can configure it and fine tune it to find the best settings instead of just going in and going, I think this, I hope this. That's not a good place to be. So back testing is great. And I jumped the gun a little bit, but now we're going to talk about the TBO Switch. So the TBO Switch is an advanced concept that I teach only in Mastering Passive Income. This is a 100% hands-free bot. It excels on the futures market, and essentially the bots will automatically go long or short, and they'll use a minimal amount of leverage. And what they're going to do with that is that they're going to automatically move with the market. So if the market's trending up, the bots are going to open a long. If the market's trending down, the bots are going to open a short, and you can just let it run. The cool thing about this is that a lot of the switch bots that we have beat buy and hold. So we're talking about beating buy and hold back with the DCA bots. Now we're going to talk about it in a different way. So if you bought Bitcoin back on July 1st, 2021 and held it till July 1st, 2022, during that time, your Bitcoin was worth 105% more, but the drawdown means that it also fell down 43%. So by falling down 43%, you have, drawdown essentially. That's no good. So while your Bitcoin is still Bitcoin, your portfolio is sagging, your position is sagging. So what the TBO Switch does is it outperforms. You can see down here, this is actually for a different trading pair, I believe. Oh no, this is Bitcoin. So it netted during the same amount of time from July 1st to July 2nd, whatever, but 2021 to 2022, it made 205%. And you can see buy and hold does beat the switch here, right here and right here. And then it starts to fall, but the TBO switch continues to move up higher. Now note that it's not a straight shot up. There's lots of little peaks and there's a drop. There are periods of drawdown even with the switch. It's not a perfect system, and it's amazing because at the Future Blockchain Summit, I met with a couple of people that are also working on their own bots, and I was asking them about Chop and things like this. And like, yeah, we have Chop too for our bots. And I was like, oh, I'm not an idiot. Good. So Chop is normal. Yes, it's inescapable. But long term, this beats buy and hold. The TBO switch is a fantastic hands-free strategy to do that. So here is actually a bot deal on dot, that started at 8 p.m. I didn't even know this started. And then it rose up 8% and it closed in profit. So this is fantastic. This is the whole idea, that the bots are just going to run while you don't even know that they're running. That's the beauty of it. That's why I love bot trading. And this brings us back to what I talked about for this entire workshop, right? By now, you should understand the advantages of bots versus humans. Bots don't care about news. They don't have emotions. They don't sleep. They have one task and they're going to repeat it over and over. They're not influenced by gut feelings. They're not influenced by friends or whatever people are saying. They're just going to run. Bots can automatically compound your profits, whether it's with the TBO switch or maybe you're using a sub account and you're reinvesting those profits, knowing that compounding your profits over time is going to outperform static. You're going to be able to grow a long-term crypto portfolio with accumulation bots. And again, thinking about that slide where we're looking at HODL versus DCA bots, where it's slow and steady wins the race. And maximizing risk to reward on engaged capital. This is going back to that idea of less is more. We want to think and make intelligent decisions with the trading pairs that we have. We don't want to just add any trading pair. We want to make sure that we have the best performing trading pairs in our bots, that we're using the DCA Back Tester to get the best possible settings. We want to use all of the tools available to us to use our money the most intelligent, or rather the bots the most intelligently, so we can make the most money with the bots. And then, of course, exploring optimal bot strategies for high and low market volatility. High volatility, meaning we're trending, low, meaning we're going sideways. So that would be grid bots. And again, understanding that whether it's a trending market, up or down, that negative price action is going to be very beneficial to our portfolio. So some next steps that I have for you, now that you've watched this entire workshop through, thanks again for sticking around. If you do have comments or questions, I will be monitoring this video and I'll be doing my best to answer any questions that might pop up in the comment section down below. But if you are really getting excited about bot trading, this is something that you see value in, you've started to understand the concepts, I talk about this in way more depth in our courses. This course, 15 Minutes to Financial Freedom, this is actually the course that started it all. So this course is our intermediate bot trading course. We talk about the core DCA strategies, how to do it. I have this really awesome calculator called the Reserve Funds Calculator. I help you understand portfolio distribution. I help you understand trading psychology with a PDF copy of this thing, the Better Traders Journal. And I also offer one-to-one coaching. So you get coaching sessions, you get active trading strategies, you get the TBO indicator for a month for free, and you get lifetime updates to the course content. So for those that are ready to get started, this is a great entry-level or intermediate-level course that's going to give you everything you need to know to get started with bot trading today. Now, for those that already understand bot trading, but you want to get a little bit deeper into it, you want more strategies, more tips, more advice, more support, then Mastering Passive Income is a much better choice for you. So this is our advanced bot trading course. While anyone really could take this course at any level, I do explain the basics. I do lay it out, but I start to go deep pretty fast. But that shouldn't deter you away from the course, because the course content, again, you have lifetime access to it as well as lifetime updates. There's a private Discord server where you can talk to other members, you talk to me, and plus you also get the same coaching benefits as you do from the 15 minutes course. You get the access to the TBO Switch settings and the setup, all that fun stuff in mastering passive income. So I want to thank you again for, oh, no, not this slide. Oh, I thought I had this great. Of course, there's one slide. Questions? So yeah, leave your comments down below. This is where I was supposed to say that. I got ahead of myself. So if you have questions, leave it down below. But seriously, thank you for watching till the very end of this workshop. I hope that you've learned something powerful and exciting and new about bot trading. And hopefully I've ignited a little bit of curiosity and passion for bot trading, because I love it so much and I use it literally every day. So if you have any questions or comments, leave them down below. If you want to find out more information, head over to thebettertraders.com, or you can even email me. My email is moonandpapa@thebettertraders.com. I'll go ahead and put it up, and I have to actually add this now in the video. It's not in the workshop. I don't want to type it in because bots will come and just start to spam me. But if you really have a question about the course content, you're not sure, just email me and I'll be happy to reply back to you and give you whatever response or reply that I can. So again, thank you for sitting through this with me. And if you've enjoyed this and you're watching up to this point and you haven't hit like, hit the like button and share this video with people that might be interested in bot trading, or at least are in crypto trading, but you think that this could benefit them. Please share this video. So until the next time, you know what to do. Stay awesome and stay in the green. Peace.